Alrighty everyone, how's it going? I'm going to be doing a review of the broad stock market today, and so I posted this in my Canadian video as well. I'm up about $5,000 on the month, which is okay. I lost some money during middle of the month, and so it's okay. I'm happy to be up $5,000, and no complaints there. Even though, anyway, coulda, shoulda, woulda. But let's get back into the market. So if you have not already done so, please do subscribe to the channel. I really would appreciate it. I'm trying to get to 300 subs by the end of the month, so if you guys can help me get there, that would be awesome. Anyway, trying to give you guys some value and insight into what I'm looking at and how to protect your accounts from losses. I was talking with a buddy about this the other day, and the beautiful thing about technical analysis is yes, you can make beneficial trades on the way up, but you really protect your account when technical analysis is telling you that there is selling ahead. And I mean, look at just all this downside as a result of the break in the daily uptrend. So anyway, let's get into it. SPY, what is going on? So obviously dip, nice recovery, going sideways, and we're kind of forming somewhat of an equilibrium. So what does that mean? That means we're coming up, and this is the high, right? We've reached the high of the daily run-up, then we've come down. That's our low. So if we zoom in here, I'm gonna get really zoomed in. Need a good view. Okay, so here's the high of the run-up, and here's the low of consolidation down here. So it's getting in a tightening range. What that means is there's the highest level, and here's our low. Right? We try to bounce up a little bit. We can't quite get past this high, so we form a lower high, and we come down. So we actually formed a higher low compared to this level. So we're going to get really tight trading sideways, and it's going to break one of these levels. It's either, if it breaks 266.70, this level, I would consider that bullish. And if we broke past this 261.79, the low of this day, I would consider that bearish. And then obviously a follow through of the lowest low would be confirmation, and the higher high would be definitely confirm bulls are in control. But right now, as long as we're trading sideways, I'm going to be looking for this range to get even tighter. So if we zoom in on the hourly time frame, and that's the safest way to play it on, if you're playing this on the daily time frame zoomed out. So you can see this a little better on the hourly time frame. Here's the high of our run up, and then here's the low of consolidation. So that's going to be our high and low of the equilibrium. We formed, popped up, formed a high, but we couldn't really pass this high. This is almost a double top, just barely lower. It is a lower high. Come down here, we form a higher low compared to this low. So we're getting in this tightening range. So we're probably going to, I don't know if we are, but we might form an even tighter range tomorrow without breaking this. But if we break this low, as I said, I would consider that bearish. And if we break this previous high, I would consider that bullish. So that's really on watch. Those are the two levels I would keep an eye on. And yeah, we'll go from there. And if we break bearish, then daily consolidation is due. And that's okay. We had a really nice bounce. I'm sure a lot of people made a lot of money, more than my $5,000, but that's okay. And we'll look for that daily consolidation, and we'll look for a higher low to form. Certainly higher than the low of the dump. And obviously if we can get higher than this low, then that would be ideal. So daily consolidation, keep an eye out for it, and that's really all that is looking at me in the face right now. Apple. Okay, so as you guys have known who've watched my channel, I have followed Apple. I'm getting the itch to go bullish on Apple. However, I've not made any trades. So let me explain why. First of all, Apple, clear daily downtrend, right? We broke this daily uptrend. Oh boy, let's see. Really, I would say the big red flag was this day right here when we punched through this low. Actually, it was the next day. And yes, we did bounce back up. Could have sold higher, but really that's a break in the trend. And in order to see follow through, we just started going sideways, and we ended up ultimately rolling over and started seeing lower highs and lower lows ever since. So, no reason to get in any bullish positions until that trend changes. So we've started to change that trend, right? Here is the last daily lower high, right? So we had lower high, lower high, lower high, lower high, and then all of a sudden consolidated, then boop, beat it, right? Went right past it, consolidated a bit more, tried to beat this high, couldn't quite beat it. Now we're kind of trading sideways. Similar to the S&P, we're going sideways, so we're going to be in a tightening range. What I do like to see is that we've been closing over this 20-day simple moving average, which is good. It's not a make or break type of deal, but it's just something that makes me feel a little bit better. And ultimately, we cannot we cannot go past 142. Obviously, if we break 142, the hope of turning this daily trend around has just gone right out the window. But yes, that's ultimately we really need to see a break of, I'll zoom in a little bit. We need to see a break of this level. It's like a triple top at this point. We've hit it here, here, and today, the top of today. So a break of 158 is needed. We have to break 158 and then ultimately 159.36. Those are the levels that I need Apple to break for me to get very bullish. So anyway, so that's what I'm looking at on Apple. Facebook, similar type deal, where we did break, we had a huge gap down, and then it's just been a daily downtrend ever since. And, same thing with Apple. I'm starting to get a tickle for getting bullish on Facebook, but, I'm not quite there yet. We have to establish that higher low. We have not firmly established that higher low yet. So I'll be keeping an eye on that, and obviously if we beat the high from this bounce, then I'll look even more bullish. But right now, kind of sideways chop, which is relatively healthy for the bulls, but ultimately I would like to see this turn around and continue up. Amazon looks, wow, oof, okay, looks like we held that level. What's that low there? 1595, 1590. Ooh, we broke it. So this was a must hold level, the low of this candle, and we did break it. So yeah, this is like a head and shoulders. If you guys are familiar with the head and shoulders pattern, here's the left shoulder, here's the head, and the right shoulder. And once we break the neckline, which is this level, which is the low of this candlestick essentially, and the low of these guys, relatively around that level, we should see some decent follow through. So be cautious if you're a bull in Amazon. Have your stops. Know what your exit plan is, because this could get ugly. All right, Netflix. And I'm not going into the hourly time frame just because it's pretty clear on the daily time frame what's going on. Like I said, left shoulder, head, right shoulder, and then boom, we have to break, like I said, the low of that candle, which is right here, which we barely broke it. So we're gonna have to see if we get follow through tomorrow. And yeah, Netflix on the daily time frame, massive run up, like I've said many times before, and daily consolidation, which is absolutely normal. Tried to get a little bounce going, couldn't quite succeed, and we could be on the brink of going down lower. So what I would be focused on the daily time frame is the low of consolidation, which is around 318.60. If we break 318.60, that is bearish. We have to hold that level to establish. We can't go past that low. If anything, we would try to form a little higher low, but it's not looking too good right now. Let's see what's going on in the hourly time frame. Ooh, yeah. So, here's the slight hourly uptrend. That's like the bounce that we saw. Came down, held the higher low, couldn't break to the higher high. Boom, we broke past this candle barely. Haven't got follow through, say, but tomorrow is going to be very telling. If Netflix is bearish, this is certainly going to go down, and we're probably going to test that low. So, be careful in Netflix. Gold, oh dang, gold's seeing some nice follow through. Wow. Initially we broke bearish out of this daily sideways pattern. We were getting tight, and then we broke bearish. Didn't see really any follow through though. We had a little bounce, and then boom, just bulls. That's a strong move for gold. So if you're playing gold or gold miners, any leveraged ETFs, congrats to the gold bulls. Nice push. Oil. So I am keeping an eye on oil. And how are we doing? Yeah, this doesn't look too great, I'll be honest. Best case scenario, this is an inverted head and shoulders, which it absolutely could be. The daily time frame is just going sideways, slightly upward. Pretty much choppy though. It's not very clear on the daily. But you know, I do anticipate a nice bounce. And even if we go a little bit lower, I do have a position in my retirement account related to oil, so I will actually add to that position if we do go lower. I've pointed out several times this bullish divergence in the RSI, and I feel comfortable risking a small position and seeing if we can get a nice follow-through bounce. So like I said, inverse head and shoulders, so this would be, call it, you know, one of the shoulders, left shoulder, head, right shoulder, and you know, obviously if we come down it's okay, and then boom, we really have to break. Ooh, this is pretty clear actually. We have to break this level, 54.54. Okay, so I've said this before in some videos, 54.54, and that also matches up here. We could not break it that first time, so you know, bouncing off of it a little bit, and we'll see if we can break through it the next time around. So I am bullish on oil, but you know, this could take some time to play out. So you know, good play. If it does play out, I will be in UWT, which is a leveraged ETF. So if that level 54.54 breaks, 20 isn't out of the question, in my opinion, and we're only at 13.27. So, you know, I might go aggressive if that play does play out. Nat gas. Not looking too good for nat gas. Not too good. Okay, nice lower wick. Bulls look like they're buying this dip, but we did break past these lows. Yes, we did, you know, close above that level, but you know that we broke through with that little wick. Ultimately, it's either going to be buys bull this dip and we just form, you know, aim for a lower high on the daily time frame, or we're going to see a huge sell-off in natural gas. You know, just be cautious. We did have a huge run-up, then a huge sell-off, nice little bounce, huge dump again. So you know, be cautious on nat gas. I don't really play nat gas, but you know, something to look out for. So that's pretty much it, guys. Keep an eye on that S&P time frame. We're getting tight, and we're going to see a break in the near future. So thanks for watching, and we will see you tomorrow.